I would request our chief guest, Mr. Vivek Johri, Chairman, CBIC, to kindly come for the keynote address. A very warm welcome, sir.
A very good morning to all of you. Shri Multani, President, other dignitaries on the dais, esteemed guests, ladies and gentlemen. Let me begin by thanking PhD Chamber of Commerce for having invited me today. It's indeed a pleasure. And it's not very often that tax authorities and tax systems are talked about in such a laudatory manner. And being such a major tax reform, which which we already know and which is often talked about, there can be no better proof than the fact that even at the end of 5 years, we're here to celebrate the anniversary. I don't recall any time pre-GST that we had such large-scale celebrations lasting almost a week, organized by different chambers of commerce and industry and other stakeholder bodies, to celebrate, let's say, Excise Day or the Customs Day. And before the discussion, before we got into the event, I was just having an informal chat with some of the other dignitaries here, and someone observed that CBIC was associated always with customs and not with much else. But here we are talking about GST. That itself shows what a profound reform and transformational change the GST has been. Very often I'm asked to sum up what the experience of the last 5 years has been. And it's described variously by different people, commentators, stakeholders, and depending on the experience where they're coming from, they characterize it as being very troublesome, very tumultuous, very difficult. Some have called it a roller coaster. So there are all kinds of descriptions of the experience. But I do not find any fundamental objections or philosophical discussions about the merit of GST as a tax system. So that in itself is very heartening. And the way I would put it is that, yes, it's been a very interesting and eventful journey over the last 5 years. It was a very steep learning curve, both for the taxpayers and more so for the tax departments. But eventually, I think we are getting there. And the business processes of GST have stabilized. The IT systems have stabilized. And if you look at a normal year, which 21-22 was, then even revenue collections have more or less stabilized. And they've reached we've consistently had revenue collections exceeding, a threshold which wasn't even being talked about only 2 years ago. A lot of concern is expressed often about the poor revenue collections from GST, and it is said that the 14% rate of growth, which was assured to the states, was not actually achieved during this period. But I think it's unfair to blame GST for some extraneous factors, like how the economy was behaving, what was the global economic scene, COVID-19 pandemic and all of that, and blame it on GST as a tax system, and say that it has not yielded the kind of revenues it has. So what I would urge all of you to think about is that in a normal year, which according to me 21-22 was, we've had very good revenue collections from GST. They continue to grow at a very fast clip. And in the first quarter of this year, 22-23, we've already done an average tax collection per month of 1.5 lakh crores. So that itself shows that we are on the right track. The achievements of GST, much has been talked about them. I think Mr. Multani also alluded to some of them in his address. They're pretty well known, and we found a one-stop solution, as he said, for many of the problems that the industry had been facing for decades on end. Things like embedded taxes, rigidities and the movement of ITC across the value chain, a very fractured tax space, a lot of problems with interstate movement of goods. I think GST has found a solution to most of these problems. Now, I would also like to remind you that, the 5th anniversary happened to be very close to the 47th GST Council meeting. And as has been the drift of most decisions that the GST Council has taken over the years, there are some very far-reaching changes that have been approved by the Council at the 47th. And I'm sure you followed what those decisions were. And these are particularly focused on the MSME sector and generally meant to liberalize the procedures further. To give you a few examples, the industry had expressed a lot of concern about centralized suspension of registrations based on risk parameters. And the concern that was raised was that even though the cancellation or suspension is done automatically by the system, but the revocation of that is done in a manual mode, and that very often takes very long. And even though the taxpayer may have filed the returns, which he had not initially filed, because of which the registration was suspended, it takes very long to restore the registration. So what the Council decided at the 47th meeting is that just as the suspension would be automatic, the revocation would also be automatic. I think that's a very, very big and significant decision. And it will go a long way in easing, the burden that some of the taxpayers felt. And many of them came to us also and complained that they were not able to transact business during the time that their registration was suspended. And very often this could be a matter of, many months. So this is a very big relief that the Council approved. There was also a lot of confusion about what kind of recoveries should be made in a case where fake billing or fake invoicing is detected in any part of the value chain. And the concern that was expressed here was that the tax department, whether the central or the state, asks each entity in the value chain to pay the entire tax or the credit at stake. The full amount was being sought to be recovered from everybody in the value chain, which is obviously unfair. And repeated demands for the same amount from more than one level in the value chain was something that was causing concern. It was seen as a measure which was excessive. This is another issue on which the GST Council has pronounced. And what they have said is that if there's a fake biller, there's an entity which is raising fake invoices, then admittedly the position is that there is no underlying supply of goods or services for that transaction. And if that is so, there is no warrant for recovering the tax from that entity. At the same time, that entity, because it has been issuing fake bills or fake invoices, is liable to penalty and may even be liable to prosecution depending on what is the amount involved. For people down the chain, of course, if somebody's taken bogus credit based on a fake invoice, the clarification goes on to say that they would be liable to reverse the credit that was wrongly taken and may also be liable to penal action. So I think this is going to ease the difficulty that many taxpayers were complaining about in the context of fake billing and fake invoices. And many of them turned around and said, we were not even aware because this is 2 levels removed from our business entity. And so it was not possible for us to detect in the system that there was fake billing at some stage upstream. The third very important change, which you would have noticed, was with regard to electronic commerce. And there was a disparity in treatment of taxpayers depending on whether they adopted the electronic commerce mode or the offline mode. And again, the concern was, and these are mainly B2C transactions, the concern was that if you do it in an offline mode, you get the full benefit of the threshold exemption or composition. But if you choose to do the same business using an online mode, then you don't get the same benefits. So that problem has also been resolved, and the council has approved the proposal to remove the disparity between the two. So even taxpayers who are transacting business in an online mode electronically will be entitled to the same threshold exemptions and composition schemes as those doing it in the offline mode. Of course, there are safeguards. So, this has been permitted for the time being only for intra-state transactions, which means transactions within the boundaries of a state, and the responsibility of keeping track of the threshold and ensuring that it is the benefit is available only to intrastate transactions has been placed on the electronic commerce operator, the platform owner. It's easy for them to do that thanks to technology, because these mainly involve a physical delivery, and so the address of the recipient is available with the e-commerce operator. So that's another very major change, which has been a long-standing sort of demand from the MSME sector. Other than that, there are some normal things like applying the 2 crore threshold exemption for filing annual returns. There's a change in the GST R3B return format, but don't be scared. This is mainly meant to address some of the concerns which the industry had been raising about how the return does not take into account, for example, additional recoveries that may have been made, taxes that may have been paid, or amendments that may have been carried out in GST R1. The details are not being captured in a very granular way in GST R3B, and the proposed changes will help us to do that, and therefore it will be facilitative for the trade rather than adding to their compliance burden. So these are the 5th anniversary gifts which the GST Council has bestowed on the trade. And that's not all. I was going through the list, and there are at least 21 clarifications which have been issued on a wide range of subjects where we had received representations from the trade. 7 of them relate to supply of goods, another 14 relate to supply of services, to clarify the position. And some of them, for instance, I'll just give you an example. The Ice Cream Parlor Association had been raising the issue about whether for the past period also they were liable to pay tax at 18%, or is it going to be 5%? So is it going to be restaurant service, or will it be chargeable to 18%? The council has clarified that for the past period, they've all paid at 5%, and the council has clarified that that would be sufficient. So they will not be liable to pay the additional tax of 18%. So this is just one example, but when you go through the fine print, you will realize that there are many other such issues which have been clarified by the council. So the point of sharing this with you, although many of you may already have read the details and got the sense of them, is to say that one of the critical success factors, I think, for the implementation of GST has been the creation of a GST Council. And it's a very unique experiment, which India alone has done. I can't think of any other tax jurisdiction which has a similar mechanism. And it's very remarkable that such a large body with such a diverse range of interests, political inclinations, and all of that has been able to deliver decisions and pronounce clarifications on such a wide range of issues, over the last 5 years. They've been the other important thing to note, and these are all positives, which I think we should all be proud of, is that most of the measures which the council has announced have been either trade facilitative. So I can't recall a single instance, where the law has been made more restrictive. But where it has been, it's been done with a lot of deliberation and discussion. And it is meant actually to protect the honest taxpayer. And this is very often lost sight of. And it's misrepresented as adding a compliance burden, to all taxpayers. It's very unfair, I think, to expose an honest taxpayer to a situation where his competitors are indulging in fake invoicing, fake billing, and he's a person who's compliant, who's been issuing genuine invoices, who's been filing returns regularly, paying the taxes regularly, and yet he's expected to compete with someone who's just indulging in underhand transactions. I don't think that's a fair tax system. And so whatever provisions have been sort of incorporated for tightening, if I may call it that, the regime on, let's say, registration of new taxpayers, or in filing of sequential filing of returns, for example, these are all meant to ensure that the honest taxpayer does not has, in fact, a level playing field vis-a-vis others. So I would urge you to view them in that light. The other thing I want to say about the GST Council is that you must recognize that the decisions it takes are not taken in a hurry. There's a lot of deliberation that goes into every decision of the council. There are several committees that assist the council. I'm sure you're familiar with the law committee, the fitment committee. These are just two. And they go into every issue in a lot of detail. There are officers from the central government. They have representation from the state governments. And that is where a lot of thrashing out of ideas happens. Every representation that we receive, whether on rates, taxability, or on procedure, goes through the mill of these committees. So there's very considered examination of every issue that is raised by the trade. And it's only then that, a distilled sort of version of what can be done and what ought to be done is put before the council. And even in the council, it is not as if these decisions are taken, without any discussion. There is an exchange of views. Very often, if there is lack of agreement on a particular issue, then these matters are deferred. The group of ministers mechanism is invoked to look at issues which are either, which require more discussion. And that is also a mechanism which helps the council takes its decision. So I think this has been a very, very unique mechanism and experiment which India embarked upon, and which I think has contributed immensely to the success of GST in the first 5 years. The other very important 2 or 3 things that I would want to sort of recall for everybody's benefit is that I think we were absolutely right in going in for a tax system which is fully automated end to end. And initially, of course, there were glitches. I recall, the trade was, found it difficult to cope with the system, considering the length and breadth of the country, the size, its complexity, different levels of evolution that different taxpayers were on with regard to technology. And to suddenly embrace a system, which was completely automated was actually quite daunting at the beginning. But in hindsight, I think this was one of the best ways of configuring a tax system. And because there are very positive spin-offs, of this development. So first of all, it eliminates physical interface, in your day-to-day working with tax departments. You can work from the convenience of your homes. That is something that is very well known. I don't need to repeat it here. But there are the other spin-offs are that it's resulted in a very large degree of digitalization in the trade itself. And one thing feeds on another. So because of that, change which Indian businesses have seen, small, big, micro, all of them have felt the need to adopt technology for transacting their business. I'm sure, there are many spin-offs that are evident. So one is digitalization, the other is formalization. A large number of small units and micro units have been able to connect because, it's a technology-based platform. The movement of credits is so much easier. Also, what it has done is that it has given the tax departments a wealth of data which we can use, using analytical tools, using AI and ML and big data kind of, any number of technological tools that are available to analyze this data and to sift, the risky taxpayers from the rest. And now we're confident that we're not doing it, leaving it to the whims of any tax authority or tax official, but it's being done, in a very scientific way. There are certain risk parameters that have been agreed to, and that will keep sort of evolving as we go. And based on that, we've identified taxpayers who we perceive as being risky. And so it's possible for us to make life easier for a very large part of the population, which is compliant and, which does its business honestly. Take, for instance, a QRMP scheme. The quarterly return monthly payment scheme has the potential of benefiting 89% of the taxpayers, which is a very large number if you think about it. And it's not as if all taxpayers who are eligible for QRMP are availing of it, but the potential is 89% of the taxpayers can potentially benefit from the QRMP scheme. And we've seen that the offtake of the scheme has improved over a period of time. There's a demand from the industry to convert it into a quarterly return and quarterly payment scheme. I would like to share with you that this is a proposal which had gone to the GST Council at one stage, if I remember right, to the 46th or maybe the 44th. But, it was felt that some more time was needed to work out the details. So, for all you know, somewhere in the future, maybe not very far out in the future, you will even have a quarterly return and a quarterly payment scheme. And all this is possible because of technology. So I think we should never belittle, even though we had pains initially in proper implementation of the technological solution that we had adopted, but do consider that it was a very large system. There was data that was imported from 2 or 3 different systems, and it had all to be converted into a common sort of lexicon, common language, and then used for GST work. And that's why initially you had a lot of glitches, the capacity was inadequate, but those are all things of the past. So by and large, I'm very confident that with the kind of ramp up that the GSTN has done, you're not going to have any problem with regard to peak filing, on the 20th of every month or on the 23rd or whatever is the due date. In fact, you've not had that problem for more than, I think, January 21 onwards. We've been tracking it very regularly and very closely. And we find that there is no major problem with the system. Last month, of course, there was an event, but that was because we had changed the software and because that there were some issues in GSTR 2B. But look at the advantages of that technology. Today, you're in a position to see on the 13th of every month, you're shown the GSTR 2B, which tells you exactly how much credit you have in balance. What are the invoices that your suppliers have uploaded on the system? And whether that supplier has filed his return or not. I hope all of you are aware that GSTR 2B even gives you that status. So for a taxpayer to turn around and tell us that he didn't know whether the taxpayer has filed his return, and therefore he's not to blame if he's taken credit for a bogus invoice, is not acceptable. Because the GSTR 2B shows you very clearly that these are the 10 invoices which your suppliers have uploaded on the system. Details have been uploaded on the system, and whether that taxpayer has filed his return or not. So this is thanks to technology. E-invoicing is revolutionary. And again, this is something we don't realize the significance of. There is no other country in the world that I can think of which has adopted that method. And again, there were problems initially, but the phase-in has been very gradual, and that is deliberate. We didn't want to burden the entire sort of taxpayer community with the invoices right from the word go. We knew full well, and by we I mean the GST Council, that it cannot be done in one stroke, and that's why we phased it in. We've gradually dropped the threshold. We started with a very high threshold, and soon we're going to have all taxpayers with an annual turnover of more than 5 crores having to generate invoices for their B2B part of the business. Please remember that in the initial phase of GST, there was a big debate about how we had missed the opportunity by not going in for invoice matching. And despite being a technology hub, an IT hub, India had failed in having a foolproof system of invoice matching for GST, which was promised at the beginning. With the launch of e-invoice, you don't need invoice matching because the same invoice is used to construct all the returns, whether they be of the supplier or the recipient. So there's only one single source of truth in the system, which is an e-invoice. And that invoice goes on to populate all the other returns. So not too far out in the future, I may not be there to see it, but I can assure you, you may have a system where we can just give you all returns auto-populated. You just have to look at them and click a button to say, yes, this is right, and your return filing is over. So that is the power of technology which the GSTN and the GST system has unleashed, and we should all be thankful for that. I think the third critical success factor for having got us where we are with GSTN is the very comprehensive outreach that we did in collaboration with the Chartered Accountants Institute, with the Costworks Institute, with the industry, at the initial phases of GST, and we continue to do that. So we've done a lot of handholding. I recall there was such an intense program of seminars and outreach programs on different subjects when GST was launched for many months at end. And they've also organized for the tax officials. And so both of us were on the learning curve. And I think those also helped immensely in the smooth implementation of GST. And lastly, what I identify as another very important and critical success factor is the IGST model. That's again unique in the world. I can't recall any other tax administration which has adopted such a simple and neat solution to the movement of goods and services across borders, retaining the ITC chain without the need for refunds. So if you look at parallel jurisdictions like the European Union, of course, the context is slightly different because those are countries, we are states within a country. But every time goods cross the border, the supplier has to claim refund of taxes that he's paid, and then the recipient in the other state, the credit chain begins all over again. Now we've obviated the need for all of that through a very simple IGST model, and I think it goes to our credit that we've got it right. I don't think there are any major problems with the IGST model. The feedback we get, and I'll be honest with you, is that at the ground level, a lot of things need to change in the day-to-day working of the department. And as Chairman CBIC, I want to show you that this is something that we do not sanction. I mean, bad behavior by tax officials, or overpitched demands, or excessive enforcement, high-handedness are values that we don't subscribe to at all. And as and when we receive complaints, we do act upon them. But that is only a one-off, that cannot be a systemic solution to the problem. So as I told you, we are trying to move into a system, evolve into a system which is more technology driven, so that the discretion as far as possible is not there at the hands of individual officials. But even otherwise, I assure you that we'll continue to work to improve the quality of our service when it comes to taxpayers. On enforcement, you would be aware that we've already come out with 2 SOPs, one on spot recoveries being made during an enforcement activity, and the other, which was issued some time back, was about attachment of property during an investigation. We are about to issue a couple of more SOPs that deal with enforcement. And hopefully with that, the field will be absolutely clear about how they're expected to handle enforcement activity, audits, and whichever other touch points there are between the trade and the industry. I would also like to finally thank all of you for very valuable feedback and inputs that you've been giving us from time to time. They've been extremely helpful in knowing what the reality is on the ground, in understanding what your pain points are, and we are committed to address. We may not agree with all the solutions that you provide, but if there is a problem, I assure you that we will have a good hard look at it, and we'll try and come up with the best possible solutions. So thank you very much. I think I've overshot my time already, but I thought these are important things that we must recall.
And now, ladies and gentlemen, I would request Mr. Bimal Jain ji, Chairman, Indirect Taxes Committee of PhD Chamber of Commerce and Industry, to give his theme presentation to the members and participants. A very warm welcome, Mr. Bimal Jain ji.
At the outset, let me thank our chief guest, Shri Vivek Johri ji, Chairman CBIC, for accepting our request and gracing this occasion, GST at the rate 5 years. Thanking all the past presidents sitting on dais, dignitaries on dais, off dais, senior government official, former chairman, Mr. S. Ramesh, CGST Delhi Zone Commissioner, Mr. Anupam Prakash, GSTN Senior Vice President Dheeraj ji. Ladies and gentlemen, good morning to all of you. I'm echoing what chairperson has said today. It's fortunate, I must say, that GST got introduced in the country. It's the biggest indirect tax reform, no doubt about it. And we all are complimenting. We know that this GST has a revolution change in indirect taxes. Multiplicity of taxes has gone, double taxation gone, cascading of taxes to a certain extent gone, and realistic term, one nation, one tax, one market. We have integrated all the process together. Like we were knowing we are in an NCR region. Just recall the days pre-GST era. Noida UP VAT was applicable, but not applicable in Delhi. Delhi VAT was applicable, but not applicable in Gurgaon. I'm not going far off. And language was the barrier. I always say GST law is a Gita, Bible, and Quran. Irrespective of any language, religion, race, and caste, applicable from Kashmir to Kanyakumari. And that is what one nation, one tax, one market. A realistic advantage, we all got united together. Having said that, I also echo the role of GST Council. They're playing very important role, pivotal role. Wherein center and state both are coming together and deciding number of issues and by way of consensus. Important aspect. Look at, we are having differences of opinion. We hear a lot of news coming out, but what we are finding, everything they are deciding by way of consensus. Some of the important pointers is being said by Chairman, sir. I'm also highlighting some of the important pointers which GST Council regularly taking, and recently 47 GST Council meeting. Some of the important decision. Electric vehicle without battery pack or with battery pack. 5% GST, clarified. Even development of plot, where you are leveling the plot and putting drainage system with a GST leviable. Say it is a sale of land, no GST leviable. And two important recommendation part of Finance Act 2022 got notified very recently. No interest leviable on reversal of wrongly availed credit, but not utilized. Unfortunate part with retrospective date from July 1, 2017. And other things, we are having cash balance in our CGST head and IGST head. Now can be transferred among distinct person from one registration to another registration of same PAN number. So it is easing out everything. And look at the refund part. Risky exporter, for number of regions they were not getting refund. It is now going to be expedited. And even when we are taking erroneous refund and repaying that erroneous refund, along with interest and penalty, issue was recredit of my e-credit ledger. It is being notified PMT 03A. These are really appreciating some of the recommendation in 47 GST Council meeting. When we see GST at the rate 5, evolution and ease of business, can we think of that this GSTN, barring few IT glitches? Yes, we know that there was IT glitches. And when we talk about IT, it is by default that may happen. But handling so much of voluminous data on GSTN, we got 1.4 crore taxpayer, and data is being unified starting from registration, payment, return, assessment, adjudication, appeal on single portal, one-stop portal. Look at the eBay bill, the kind of smoothness has come. I'm saying that there are certain glitches, some problem, but still when we look at macro level, things are improving. Look at the e-invoicing, revolution steps is being taken, and Chairman sir has rightly said that they are in phase manner, started with 500 crore, reduced to 100, then 50, then 20. Now over a period of time, it would be 5 crore and more. And once e-invoicing is there, everything is captured. My ITC matching, mismatching will go away. Automated. These are definitely good advantage. And these are at macro level, we must appreciate that we got GST in the country. It's the biggest indirect tax reform. But from trade side, sir, we did certain analysis. We have taken the feedback from the members. Some of the things are coming and which I'm putting before you as a constructive suggestion. On policy issue, first of all, GST is on accrual basis, sir. We are SME and MSME. We are not being paid for 1 month, 2 months, 3 months, 4 months. And if we delay in payment of GST, rate of interest is 18% per annum. It's too high a rate, sir, looking at the present situation. And when you compare the interest rate when we get from the department on delayed refund, it is 6% per annum. There is no parity, sir. This is the feedback I'm sharing, sir. This is what we got from the trade and putting forth before you, because you are listening to us and you are really taking up these matters before the GST Council. Second subject matter on policy, rate rationalization. We got different rate, and there's a group of ministers, they are talking about their submitted report, and this report would be considered by GST Council. And there is news coming out that 5%, 12% and 18% GST rate will maybe two-tier rate. My only submissions are twofold. The first fold, yes, we know that we started with a revenue neutral rate of 15.5%. Now it is about 11.6%. There's a need that we need to phase out the exemption. We agree with you. PSD Chamber of Commerce is agreeing with you that we can phase out the exemption, and exemption should be given only for the necessity. But when we think of upward revision of GST rate, maybe you can look into. All the time, upward revision is not giving good advantage to all of us together. And changing GST rate and then to done away with the inverted duty structure in piecemeal manner, it is also not giving certainty and clarity. My only humble submission would be, why can't we prepare one white paper and propose the slab according to the goods and services? And whenever you're making change, that white paper must be put on public domain for their input, suggestion, and feedback. Maybe we can come back to you. And I'm only saying we have seen when rate is increased, we see the tax arbitrage. We see the tax evasion. So maybe increasing the rate, maybe you can look into my submission only. Coming to the challenges, sir, Yes, you rightly said, a lot of points you have picked up for macro level. Even at macro level, I'm raising certain concern. Legislator intent is there in the GST law. So legislator intent with the implementation at ground level and how they are reading the law, what kind of ease of business we are getting. Let me put forth some of the pointers before you. The first pointer, retrospective amendment. Sir, my submission would be, don't bring in retrospective amendment like section 7, subsection 1, subclause AA. Activities and transaction by club to its members. And that too with retrospective date, and there's deeming fiction. Just try to appreciate these are B2C transaction. Transaction has already happened. Now this is B2C, where from they will get the money collected. If this retrospective amendment for the chargeability, only submission from our side would be that retrospective amendment for the chargeability should not be. That's the submission from our side. Coming back to deemed supply concept, schedule 1, even without consideration, cross-charge is one of the points which we are debating at length. Cross-charge means supply of goods or services between related person or distinct person, even without consideration. And I'm sure a lot of companies are not following that. They're looking for the clarity. For the region, pre-GST, stock transfer of goods was not chargeable to VAT, barring some state for ITC reversal. But in GST, we have said it is deemed supply. So first of all, understanding issue, lot of taxpayers not agreeing, how can my right hand can give service to my left hand? Which is the cross charge first. And second, the valuation. If you go back to valuation, sir, one of the important point, and this may be one of the area of tax evasion as well. Proviso 2 of Rule 28 says I can pick up any value as a supplier. If recipient is entitled to avail credit, that would be considered open market value, deemed open market value. Can it be ₹1? Because that is what Proviso is saying. Or can it be any higher value to just move a credit from one state to another state in the name of cross charge when this Proviso exists? When recipient is entitled for ITC, then maybe we can look at relaxation that for ITC when available, we can done away with the cross charge. The problem is when it is for exempted sector like healthcare, like education sector, credit is not available. First go, they are not getting credit. Second go, if cross charge applicable, then that credit become again cascading. And third problem, valuation, whether salary need to be included. Salary is being taken out. Schedule 3, neither a supply of goods nor supply of services. So these are the pointers we are looking for the clarity. In Schedule 1 transaction, another transaction is which some of past president has faced during the audit time. Any guarantee given by the director or the parent company to subsidiary company for taking a loan, whether this is really supply of service, first of all, and second, if it is supply of service, what would be the valuation? I may have taken a loan of 50 crore and there's no valuation mechanism. I'm not being paid. I'm not charging any money. I'm only giving my personal guarantee in addition to the all corporate guarantee and hypothecation. Next point is, sir, Schedule 2. And Schedule 2, again, very good. It is either to determine either a supply can be supply of goods or supply of services. But there's one important point to liquidated damage, which is as per Schedule 2 is a supply of service, but it has to be read in the context of whether it is supply or not. Liquidated damage are being paid only for the contravention, for the contract as a compensation. We are never entering for the performance of contravention of contract. They have said, and I've seen you on circular yesterday, and highly appreciated, highly appreciated. Now, one more pointer, which is again, sir, you will agree with me, intent of legislator is very good. That is the way law is being drafted, and that is the way amendments are happening. Schedule 3, neither supply of goods nor supply of services. So supply of goods from non-taxable territory to another non-taxable territory. I'm registered in India, but I'm getting goods delivered from Korea to US. It is entry 7, neither supply of goods nor supply of services. But Schedule 3 got amended only with effect from 1st February 2019. So at ground level, what is happening? They are saying prior to 1st February 2019, it is taxable. Whereas IGST had clearly saying it is applicable only whole of India, not outside India. Now, again, on same context, legislative intent versus implementation, you can pick up the example of composite supply, for which we have gone up to Supreme Court in the Mohit Mineral case. If concept of composite supply exists in the case of CIF import, it is a composite supply. So whenever law intent is very clear, then notification cannot go contrary. And what for we are creating litigation? Only submission, humble submission before you. The main pain area which we got from the trace side, they all are sitting here, is the input tax credit. And that is the most pain area. The first I'm starting that petrol and diesel being out of GST, cascading continuing, that is a matter of, send GST Council to decide as a way forward. But section 17, subsection 5, which is there within the GST law as a block credit and negative list. When GST law got introduced, it was envisaged seamless flow of credit. I'm getting my factory constructed, hotel constructed, mall constructed, and that I'm using for taxable outward supply. So on construction, I'm not getting credit, but my outward is taxable, creating cascading. And when we are talking about infrastructure development in India, so this is the point of concern I'm just putting forth before you. Coming to ITC mechanism, yes, we know there were certain black sheep in our system. They have spoiled our system and they're termite. I do agree, and we are not advocating for them. When we look at the GST credit provision under section 16, subsection 2, there are a lot of conditions started with the 4 condition, then got added 5th one to be checked. Then we got this year budget 6 restriction. Sometimes this is the voice coming from the trade. Why so many condition and restriction? Yes, I do agree. On one side, we want to check, verify that genuine, honest taxpayer must get the credit. And those who are dishonest, they should not get the credit. But this is creating hassle in the trade in terms of understanding smooth ITC. And second, which you have clarified by way of circular, but still I'm putting forth before you, recipient credit is being denied as ineligible. They are recipient, they are availing credit, it is being termed as ineligible credit, maybe because supplier or preceding supplier or L1 or L2 is non-existent, or his registration get cancelled with retrospective date, or he might not have paid the taxes. First, we have to understand, sir, why this situation has arisen. We have not implemented automated GST return system with ITC matching and mismatching, which we invest as GSTR 1, 2A, 2, 1A, and 3. GSTR 2 and 3 never got implemented. In this process, even my buyer can only see the transaction with the immediate supplier. He can check whether 2A is auto-populated, whether supplier has paid the taxes or not, but beyond the supplier, he can't see any transaction. Thus I agree. And I just wanted to say to this trade as well, this is being clarified. And this is what a lot of litigation has started. So look at scrutiny notices. Scrutiny notices for credit not matching with GSTR 2A. 38,000 scrutiny notices are being sent only for the 1780. Now my submission is, 2A, as per the law provision, was not there. 2B got introduced only from 1st January 2022. And we got Bharti Airtel judgment from Supreme Court saying GST is a self-assessment tax. And 2A is only facilitation. But at ground level, they do not understand. They're saying if it is not matching, I'm giving you the notice. And last time when we were discussing together, we were talking about some threshold. Why to invite unwanted litigation? It is time and efforts lost for both of us together. This is the one pointer. Now coming on the important pointer, like when we are talking about fake invoice, fake credit, of course, I do agree with the e-invoicing, with the sequential filing of GST return, everything will ease down. And this is process to come. But for the past period, whatever clarification is being provided, they must implement. When clarification is given at the ground level, they are not listening. Giving you a right example, during search and seizure, instruction is being issued that no money should be asked to be collected unless accepted by the taxpayer. But ground level reality, I'm telling you with my folded hand, it is not a critics. I'm giving a ground level feedback to you. Nothing, sir. They give the threatening of arrest and then get the money collected. We are filing DRC 03. That instruction, when we show to them, they are not ready to listen that one. And even for the parallel proceedings, state are not giving any importance to that instruction. They're saying it is central. We are not listening to that. And you have to get it deposited. I can tell you some of the live cases which I can produce before you. Even Center DGGI anti-evasion has done. Two authority coming for the same proceedings and state then coming and saying, I will also do the investigation. Yes, we are into dual GST mode, but the taxpayer need ease of business. He's saying that, okay, you have started the investigation, you culminate the same. That is the only submission I'm putting for. Now, when we talk about arrest provision, of course, I'm with you. I'm with you, and we are not advocating for the tax evader. They have taken fake registration. They have passed on the credit by way of only GSTR1, did not pay the taxes, must be handled properly. And this is the voice of the trade. And we are saying so. But only problem, we need balancing. This has to be distinguished approach with the honest taxpayer. Yes, provision must be strengthened, and we must cross-check, and we must ensure tax evasion should not be there. But the honest taxpayers should not be handled with the same stick as we are doing with the dishonest taxpayer. Coming to the last 1 or 2 points, said provisional attachment. Yes, instruction is there, but look at the provisional attachment provision under Section 83. First of all, it was stated that during pendency, and specific provision was there, 62, 63, 64, 67, 73, and 74. Now it is being widened. After initiation of Chapter 12, 14, and 15, starting from 59 to Section 84, even after issuance of summons, this power exists in the hands of Commissioner. What I'm putting submission that we can create one credit rating, even for the taxpayer, that where from I'm purchasing goods and services, if credit rating is being assigned, I would be knowing that he's a tax compliant supplier. So I can really choose my supplier, know your supplier concept. And then accordingly, this ITC dispute, whatever going on. Similarly, we must also put accountability and responsibility for the tax officer as well. Yes, I do agree at the ground level, sometimes you're also getting feedback, but that need to be cross-checked. Provisional attachment and recovery. Recovery can happen only after 3 months when order is being passed and I'm not paying the taxes. But recovery initiated even before that. Only submission, sir. And last 2 points, GST at the rate of 5 years, we all are looking for appellate tribunal, appellate authority for the advance ruling. When state are giving difference of opinion, difference of advance ruling, and GST tribunal. A lot of cases are piling up before High Court and reaching to the Supreme Court. We are SME and MSME sector. We are not in a position to go and file writ petition before the High Court. We are only looking for the clarity. And last submission, sir, maybe this can be considered. We are having different kind of dispute. One is on interpretation and classification with respect to rate. One is pertaining to the tax evasion. One is pertaining to GST ITC. Yes, you have clarified GST ITC issue. You have clarified 17 subsection 5 block credit concept also. But only point, if dispute resolution can take up interpretation issue, classification issue. And maybe that dispute resolution panel can be headed by past CBIC chairperson or any retired High Court judge or Supreme Court judge, so that we can get the clarity. And that for interpretation, we can say only you pay the taxes, accept the tax, no interest, no penalty, because interpretation issue. Maybe for the tax evasion, you must take, and we are with you, that interest and penalty. So these are my submission, quick and short before you, because your time is very important. Whatever best I could present before you from the trade side, I'm thanking each one of you for being part of this National GST Conclave. Thank you very much.